Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Thursday, November 20th. We have got a great show lined up for you today. First up, Nvidia. The company reported earnings last night. Revenue growth accelerating once again to more than 62% on an annual basis. Jensen Huang came out strong, asserting right off the top that he doesn't see an AI bubble. And so we are kicking off the show today with our first ever bull-bear debate on Nvidia. We will get to that shortly. We're also talking about the White House today. It is deep in AI policy discussions, and we have some exclusive reporting on a new AI executive order that the administration is working on. And we're then taking you to the land of prediction markets, where Coinbase is now expanding into, according to our reporting. And finally, we are talking about the gender gap in venture capital with the CEO of Allraise to talk about the organization's push to bring more equity to the venture capital world. It is a big show, and so let's get right on into it. Nvidia shares were marching upward this morning as investors expressed optimism around the company's quarterly earnings. But today, we are hosting our first ever bull-bear debate on the show. We are joined by Ben Bajarin, the CEO and principal analyst of Creative Strategies, who is our bull for our Nvidia debate, and also by Jay Goldberg, senior analyst at Seaport Research. He has a sell rating on the stock, one of the only, if not the only, analyst on Wall Street with a sell rating. Welcome to the both of you. It's great to have you here.
Thanks for having us.
Okay, so are we ready? Are you guys ready for it?
Bring it.
The gloves are on. Here we go. Okay, so here's how we're going to do this. Okay, I'm going to give you both 20 seconds for opening statements, okay, to tell us why you're a bull, why you're a bear. Okay, and then we're going to talk along this issue on 5 verticals. We're going to talk about the technology, the macroeconomic conditions, the valuations, the financials, the circularity that is ongoing, and then we're going to end with the Jensen factor, okay, because that is something that we don't talk about enough, I think. So, Jay, since you are our bear, I'm going to start with you for your opening statement. Again, you have 20 seconds. Lay it out for us, and then we'll get more into the details.
I think the bear case comes down to demand. What does end demand look like? And I think there are signs right now, and a growing number of signs, that it's getting harder and harder to generate the demand, to pay for the demand, to finance the demand for all the people who want to buy NVIDIA chips.
Okay.
Right? It's as simple
That's
as
20 seconds. 20. I got to stop you there. But we're going to come back to the demand. That's a good point. Ben, your 20 seconds starts now.
Bullish because we're in early stages of AI. It's mildly adopted across consumer and enterprise, and this is the single most computationally complex software we've ever seen in the history of software and development, which justifies massive amounts of compute.
Okay, we're early. But is there enough demand? Will the demand last? Rather, these are good thoughts all around. Let's start with the technical aspects of NVIDIA's technology. We know that everyone says it's better by a long shot. Everyone's trying to catch up. There's a question whether or not they can do it. Jay, I want to start with you. What is the bear case on NVIDIA's underlying technology?
Sure, NVIDIA has great products, but others are catching up. I think it's as simple as that. If you look at AMD, just had an event last week where they outlined their roadmap. They're getting closer by the day. Right? They have now competitive silicon. They're going to have competitive racks. They're going to have ROCm software was lagging by years, a year ago, and now they've closed the gap considerably. By 2027, they're going to be fully competitive. On top of that, and probably more crucial, is NVIDIA is competing with all of its customers. All the hyperscalers are designing their own silicon. If you look at Google TPU, I would argue that you could make a pretty solid case that TPU is a better chip for doing large classes of AI workloads. So,
okay,
products at NVIDIA, but the competition is real and getting better.
Ben, what do you think?
Yeah, I think there's a lot going in NVIDIA's favor in terms of 2 points that Jensen's like to make that I actually think are relatively valid and line up with the way that we think cloud software and cloud AI workloads will develop. One is architectural compatibility. So when you're a software developer, you want to write software for what is the single architecture or architecture compatibility across either multi-clouds as well as desktops, and then you want install base, right? And NVIDIA has the single large installed base of GPUs both at the edge and in the cloud, and that that number is increasing by an exponential. So as much as, I agree TPUs are great products and I do want competition and I want AMD to do well, there's something very specific from a software development, a deployment, and a continued innovation standpoint from all these developers for technical architectural compatibility and the installed base that continues to favor, Nvidia, and Nvidia getting better and better and better at processing these insanely big models, right? If Gemini was a 5 trillion parameter model, we're going to 10 trillion parameters, we're going to hit 20 trillion parameters. That demands unprecedented levels of compute, and that's just Jensen and Nvidia's sweet spot.
What about, Ben? What about the chips that are focused on inference? Why aren't those concerning to you right now as a threat?
I think that will become more of a opportunity going forward. And then again, you got to ask yourself, and I firmly believe this, that NVIDIA will begin to fragment their product line from one general purpose thing that's both good at training and inference to offer also an inference specific product. Because again, it fits their strategy for, we've got CUDA, we've got software developers, you're already going to run and train on us, so why not inference on us? And so you'll build out inference data centers also with a SKU that I believe NVIDIA will make. We're just not at that part of the cycle yet. In fact, very few people, if any, actually have any successful inference only product. This includes TPUs as well. AMD's Helios will also be for training and some for inference. So I think we're just in that stage, but I fully expect everybody in the space, NVIDIA included, and the names that I mentioned, to offer also inference products, because you're right, it makes sense to just have inference data centers with inference specific products.
Jay, what do you think?
I think inference is too soon to tell. Right.
Too soon to tell. Okay.
I think the market for inference will be huge, but I don't think we have a good grasp of what those workloads will look like. And until we do that, it's going to be hard to tell what the silicon footprint will look like. And I think it's anybody's game. And I think that's a vulnerability for NVIDIA going forward.
Okay. So Ben, let's move to the valuation and the financials. Look, the financials are strong. We saw them last night on the call. The valuation is extraordinary. I mean, we these multiples are nuts. How are you thinking about it?
Yeah, I mean, one of those things where we just don't have a ton of context for this, right? I mean, you just look at how much money they're making, how much money they're slated to make, how much money Jensen is forecasting, right? He's saying essentially right now you can basically book, we're going to do better than 350 billion of revenue in 2026, which I think is, crazy. But if you look at most people's forecasts, again, along two parallel vectors, which is one, we're seeing the largest build out of AI data centers that we've ever seen in terms of how many gigawatts is being added globally over the next 5 years. And those will be filled, right? You're talking about over 150 gigawatts ex-China for the rest of the world. I'm not putting China in there because NVIDIA is not selling to China. So let's just go ex-China. That is a lot of gigawatts for data center only builds between now and 2030 that will be filled with GPUs, right? Or
so the market is there. The market is there basically.
The market is there, and I think people are underestimating the gigantic platform shift in architecture that happens when you move from Hopper to Grace Blackwell to then Rubin to then Feynman. These are leap step functions in GPU compute that the software world will have access to that they did not have before. So it's like a huge leap in performance in compute. And again, all of that's going to go into all of these data centers now that are being built for AI. So the world's going to look very different, honestly, computationally, and in terms of the opportunity for software developers, for employments, for enterprise to deploy these things at scale in a year or two than they are right now.
Okay. Jay, the valuation's high. What about the financials? Are you seeing any red flags there? Rebut what Ben's talking about here.
Sure. Right. So valuation is, price versus earnings. And I think there is an argument to be made that the earnings are starting to show some signs of friction, right? One of the things on the call that, or actually not on the call, they didn't mention it, but in their press release, they pointed out that they had booked $14 billion of cloud compute services, right? Huge amount of cloud compute services they prepaid for. And I don't know this for a fact, but I'm pretty sure that's what we call backstops, right? Whenever one of these neoclouds buys chips systems from NVIDIA, it comes with a guarantee that NVIDIA will backstop some amount of demand from that neocloud, right? NVIDIA doesn't need anywhere near $26 billion of cloud compute services. This is essentially a discount, right? And so the question is, why do you have to discount that? I mean, there's a bigger question too, is which the neoclouds all say we're fully utilized, 100% utilized. Well, if that's true, then why do you need the backstop? And if these backstops are helping with sales, isn't that a discount? Is pricing maybe a little bit weaker than the sort of headline numbers would indicate?
Right.
It's not a smoking gun, but it is definitely it's not as easy as it looks from the outside to sell these systems.
Okay. So vector number 3 that I want to get into is the macroeconomic situation and the macro situation at large. There are trade issues. We're in a certain type of interest rate environment which could change. Jay, what is the bear case around this? Do you have any confidence that things will get better on the trade front?
I well, no. I, the trade stuff is so complicated and it's so wrapped up in political issues rather than technical or commercial things that I could talk about. I think the dynamic with China is gonna be very challenging, and it's a big vulnerability for Nvidia. But also, I am there's this meme going around that the whole U.S. economy is sort of depending on Nvidia's earnings. That gives me some cause for concern, right? It worries me a little bit that it seems like a lot of companies out there are really dependent on Nvidia and this whole AI build, and not just computing companies, but energy companies and electrical companies and piping companies, industrial companies. There's a lot riding on Nvidia's prospects, and that's probably not a great long-term dynamic.
Okay, Ben, this doesn't worry you.
I mean, I agree with Jay on the trade stuff. I mean, government's government, man. Like, that's just going to be a hot mess across the board. I would come at this the other way, though, where I look at just this opportunity in terms of, again, scaling out, and we're in a build out phase for data centers, which is coming from the hyperscalers, right? So when Microsoft CEO and Google CEO and Amazon CEO tell you they have never seen an environment like this for demand for their cloud services, when again, right, they were already building out new infrastructure and new clouds just for basic cloud software, because all enterprises are moving their workloads to the cloud. In fact, most statistics tell you less than 45% of organizations are fully deployed to the cloud today. So there's just a bunch of enterprise money that's going to go for cloud deployment. That's not including AI, where less than 10% of IT budget today is for AI. So they are building capacity for the world to move to the cloud for software. And that was just in general software. We're not talking about AI. So they are seeing the demand, they're building the pipeline, and we have friends in all forms of the supply chain, from power to electrical to equipment to manholes, which is my favorite. We can't find enough manholes to build it. My anecdote that I share lately. And that's coming because hyperscalers are building and driving demand for all this. So it's really the hyperscalers who drive this. So then the question becomes, how tied are they to Nvidia, right? And that's, I think, the central part of this. But whether or not, right, that's Nvidia or something else from an economic standpoint, the hyperscalers will keep building, and they're going to use the best solution, whatever that is, to fill their data centers, to make money on tokens so that they can fund their clouds with enterprise software.
But I want to go back to that, because how much of Microsoft and how much of Oracle's at capacity data centers are actually going towards OpenAI? Right, it's a fairly big chunk of both Microsoft and Oracle's needs right now is fulfilling OpenAI. It's a really narrow base. It's like 4 or 5 companies are holding the whole thing up, right? And in the case of OpenAI, like, full credit to them, they have incredible models, they have incredible technology, but let's not forget they are essentially a startup, and they're burning a lot of cash, and they have these big plans to spend $1 trillion in the next 5 years. We don't know where they're going to get that money from. They don't know where they're going to get that money from. How much of Nvidia's sort of long-term outlook has OpenAI baked into it? It's a pretty big number, and I think that's, I don't know how reliable that is.
Ben?
Yeah, I mean, OpenAI aside, like, I just have zero doubt on where the cloud guys are going, because again, they are right now spending less than 30%.
You're basically putting it on the cloud. OpenAI side, you're saying the cloud. The hyperscalers are spending enough on CapEx.
The hyperscalers are spending enough on CapEx. And again, that's they're spending right now less than 30% of their cloud revenues. So they have opportunity to keep investing, keep monetizing, keep seeing the AI-centric portion of that road. And then again, remember, these are not one-trick ponies. And I think that's one of the challenges for OpenAI and some of the frontier labs is that's their only revenue model. Like Microsoft, Amazon, Google make money from a lot of other stuff as well. So they have the opportunity to continue to invest and fund. And a lot of ways, like, I think what gets missed in this, how much money should they lose? Like, let's remember that for a decade plus, Amazon lost money investing in their future of capacity of books and warehouses and infrastructure before they turn to profit. And that's why, like, that's not dissimilar to what we're seeing now. There's just such a big belief that AI will monetize, that people will see revenue, will be recognized, that this is the build out phase. And that's the hope, right? And I'm okay with us taking a giant swing at this, if not from the essence of, I think America should lead and win in global competition on AI. And so I'm all for these companies taking these giant swings. That's a very American thing to do. And I think that this is, like, again, but I'm optimistic that the returns we see from AI are already so positive early. And again, less than 10% of IT budget. Money will come. How much? Is this a $5 trillion industry? I don't know, but money will come.
But and this gets us to point number 4, which is a circularity here, which is, I think, Jay, what you're getting at here. Ben, the circularity, and I know we're talking about OpenAI here. We're not talking as much about the hyperscalers, although they are involved in this to some extent. The circularity of these funding deals, that doesn't concern you at all?
I mean, again, where's the money going to come from? This is an absolute sort of critical point. But there's a handful of people in this industry that do this, right? It's hard to look at this and say, like, let's penalize industries, people who have 4 or 5 customers, because that's pretty much common throughout really a lot of the semiconductor industry and the semiconductor supply chain, right? You have your giants who invest in your partners or customers just because there's a handful of people that make you a bunch of money, right? And I'm not really that worked up about, Jensen's point about, look, we're going to continue to invest in the ecosystem. You have a company, again, that's going to generate over $500 billion of free cash flow. What are you going to do with that money? It makes sense to invest in your ecosystem. It makes sense to invest in accelerating CUDA and make that as wide. Like, that's a strategic thing that anybody in strategy, I don't think, would disagree with, right? When you want to deepen your ecosystem. So again, that would be a problem, in my opinion, if there was no demand. I think the demand is insatiable and everybody says it. And so it's hard to say, like, with the demand you see, keep investing, because there's no signs that demand is slowing down.
Jay, the Amazon analogy that Ben made, do you think that is a parallel here? Are there caveats that come to mind for you?
So I think this is to some degree a question of timing. Like, I'm willing to believe that long-term AI is going to be incredible and is going to deliver all kinds of important gains. I just think no technology as significant as AI is supposed to be gets adopted in a straight line, right? And between today and us getting to AGI, conscious robots, talking computers, sentient computers, between here and then, there's going to be some pretty serious corrections, and we're going to see that across numbers. And
right.
I don't think we can say today what the compute footprint will look like when we get to our compute overlord future.
So the last vector here that I wanted to talk about is the Jensen factor here. And the reason I wanted to talk about it, and I guess this one is, to be honest, it's less of a debate, it's more of a question that I have for the two of you, which is, how much of NVIDIA's valuation do you think is attributed to Jensen alone? And I know, it's a question that has been asked, for example, with Tesla, with Elon, right? And you could raise the question, if Jensen stepped down tomorrow, what would happen to the company? Would it maintain its competitive edge? Jay, what do you think of that?
So full credit to Jensen. I think he's one of the best CEOs in semiconductors and tech, probably in the country. But one of his superpowers is his immense charisma and his speaking ability. He loves to talk about his big visions for how the future is going to play out. And I admire that. It's compelling to listen to. But it can also get us into trouble, right? Jensen will be talking about the future and leading us off a cliff someday, right? And I think he likes to talk. He's pretty good about it, but sometimes it gets in trouble, and we see that with China and the U.S. now. He is having to walk this very fine line between China and the U.S. And he said some things that have gotten both sides upset. And so the last few weeks he's been pretty silent on the topic. And I think, in general, he's very persuasive, but he also is, he's not going to tell you that there's an imminent stop coming. We're going to just follow him until it all falls apart.
I realize that we've kind of teed this up now, Ben, for you to end us off, telling us about all the ways that Jensen is awesome, which I trust is not that hard for you to do.
Yeah, no, I mean, obviously, I think Jensen's charisma, his technical understanding, just his passion for this industry, and the way that I think he's predicted relatively good shifts in the industry is true. But in terms of, like, again, how much is this him and tied into his future? I would just offer this analogy, which is Apple, right? The same conversation came when the tragedy of Steve Jobs' death happened, that it was really can anybody be Steve Jobs? Is Apple completely screwed? And there's just something to when you have really good products that
Mm.
delight customers and that add value and create value, that is sort of a fundamental point about why I think these products can continue. And that basis of the product, like the product merit, what the product's going to do, speak for itself, which is really what happened with Apple, right? It was a great culture, it was a great product. Tim Cook is a great CEO who continued to scale and operate that company, but it was because of the culture, the vision, the infrastructure, as well as the product
But
vision.
although I will say, this is a question people have now is, I mean, Apple's innovation has kind of stagnated as of late, right? And I know we're talking about different points in the company life cycle, right? I mean, this is now many years after Tim Cook has taken the baton. But look, I mean, you look at Apple right now, you could say that it's kind of stagnated.
Yeah, and I think history, knows that hardware innovation happens in cycles, right? There just becomes the limits of physical technology. What can you do, right? And I would say let's wait and see what the next 10 years looks for Apple at a hardware innovation point.
Right. All right. Well, I want to appreciate both of you I appreciate both of you coming on. It's a great discussion, and look, we're going to try to do these for all of the Mag 7 companies, and Nvidia, it was a logical starting point. I'm excited to get both of your thoughts along the way on maybe some of those other Mag 7 companies. And until then, thank you both for coming on. We appreciate it.
Yeah, thank you.
Thank you.
See you soon. Okay. The White House has been thinking hard about AI lately, and a new story my colleagues Sylvia Varnham and Aaron Holmes published yesterday reveals new details about an executive order the administration is working on, and I want to bring them on both to tell us more about what they've found. Sylvia and Aaron, welcome back to the show. It's great to have you here.
Hey, gosh, great to be here.
All right, so let's talk about the White House. Sylvia, what did you find in your reporting?
Yeah, so yesterday we obtained a copy of a draft executive order that, as you said, the White House is working on. And it's effectively trying to prevent states from regulating AI. Now, this order, which is still in draft phase, directs the Attorney General to create a litigation task force to sue states who enact AI laws that the administration is unhappy about. It also instructs the Commerce Department to withhold federal funding to certain states as well over this issue of AI regulation. So it's a really interesting document, obviously raises a lot of questions as well.
Okay. And Aaron, if you think about what a regular or an executive order like this, what impact it would have on Silicon Valley and on companies, what stands out to you?
Yeah, I mean, this is essentially something that a lot of tech companies have been asking for from the White House for a long time. We saw Mark Andreessen essentially come out this week in favor of such an action to block states from regulating AI. And we've also heard that Meta, Google, and OpenAI have been asking for, similar action. The basic reason for that is that, these state regulations make it more onerous and costly to comply with as they build AI models, and those companies don't want to have to deal with a patchwork of regulations across different states. So they're essentially, using their lobbying with the White House to ask for some sort of action to preempt those state laws.
Sorry. I was going to ask you a question and then I started choking. That's the first time on the show, but as you can see, it's just a very exciting topic. Sylvia, my question for you, if my voice will allow me to ask it, is has something like this been tried before by the White House or by any federal regulators?
Yeah, so this is a really interesting area because it has been tried before. People inside the White House were, in addition to people in the technology industry, lobbyists were trying to get a provision included in Trump's big, beautiful bill back in July. They wanted a state AI moratorium added to that bill, but it was very unpopular, and it was actually killed by the Senate in a vote of 99-1. The White House is also trying to see if they can revive that provision and include something similar in another piece of legislation. So it seems like they very much want to find a way to do this, but I don't know if it's got the popularity needed amongst Republicans as well as Democrats, of course.
Right, and I'm talk about these state regulations that the White House is trying to block. How many of these state regulations are there even? And specifically, I guess if you could talk about a few states that have implemented them. I'm just wondering how big of an issue this is at all.
Yeah, well, there are more than 1,000 bills that have been introduced at the state level, and several of them have passed. The executive order, or the draft executive order that we saw, takes particular aim at Colorado and California, where acts have recently been passed, and these address issues like the potential for algorithmic discrimination and transparency issues. So there is certainly a lot of activity at the state level. The people behind the executive order and Trump himself have advocated for a national standard as opposed to this patchwork that Aaron mentioned, although it's not really clear to me, at least, when such a national standard would materialize, what that would look like. There is some instruction in the order for David Sachs and others to begin that process, but it's not clear when or if a national standard would come to pass.
Aaron, as you think about watching this issue moving forward, what kind of questions come to mind in terms of how you think tech companies will be affected by this? But also, is this going to encourage more lobbying from the tech companies to sort of push what they want, given that it seems like it's kind of working?
Yeah, I mean, I think it's going to be really interesting to see what sort of legal arguments the Justice Department tries to make to challenge these state laws. And, that could have huge implications for the tech companies that are building these AI products. The order that we saw a draft of essentially implies that the Justice Department might claim that these state laws violate the Constitution, possibly violate the First Amendment, which is interesting because it's a similar argument that companies like Character AI are making in various lawsuits that they're fighting, saying that AI models essentially have free speech rights, just like citizens do, which, if that ends up being the tack that the Justice Department takes, would have pretty huge implications for all of the developers of AI models, as well as, all of us who, might interact with AI models on a day-to-day basis. So I think we're definitely going to see tech companies continue to lobby to try to shape what those arguments look like. And that's something that I think we'll be closely watching going forward.
And last question for the two of you, and look, anyone can jump in if they want, or if they have an idea of this, but I'm wondering how this would affect consumers of AI products and services, right? I mean, we seemingly use these applications without thinking about any of the kind of regulations that are put in place at a federal or a state level. Sylvia, anything come to mind, or Aaron, around how I could be affected from this as a user of a chatbot?
I think
there we go. That's what I wanted. I wanted excitement
You
on
go,
both
Aaron.
ends. Okay. Sylvia, I'm going to come to you first, and then we're going to Aaron.
Well, I think it's a matter of how these models and how the companies creating these models are regulated. And that, of course, has an effect on consumers, because this is extremely powerful technology that more and more people are interacting with in more and more ways. And what Trump and the people behind this order are advocating for is a really kind of light touch approach. And the folks in favor of state regulation would argue that states can act quicker and address concerns that are cropping up now.
Right.
So I think, whether these companies are regulated and how they're regulated, of course, has consequences for us, the users of chatbots.
Aaron, what do you think?
Yeah, I mean, so far, some of the state laws that we've seen in places like California or Colorado focus on basically forcing companies to disclose when you're interacting with an AI product. So I think that, might have implications if you've ever waited on a phone call with customer support and you're not sure if you're talking to a human or to an AI agent, that might be the type of impact that you see from these regulations, whether or not they go into effect. So I think that that could be the type of thing that states are trying to target right now that some of these companies aren't too happy with, and that might be one of the impacts that you would see as a consumer.
Great. Well, Sylvia and Aaron, it's a great discussion. I want to thank you for coming on. We really do appreciate it. We'll see you soon.
Thank you.
Thanks, Akash.
Okay. Prediction markets have boomed in 2025, so much that Coinbase has decided it wants in. My colleague Yueqi Yang, who reports on all things crypto, wrote a deep dive this week on the crypto exchange's plans to offer a prediction market of its own by partnering with Kalshi, one of the two big players in the space. Joining me now is Yueqi to tell us more about what she's learned. Yueqi, welcome back to the show. It's great to have you here.
Hey, Akash.
I've been waiting to do the prediction markets segment on the show. I can't believe it's taken this long, but I am so excited to talk about it with you. Talk to me about what we know about Coinbase's plans to expand in the space.
Prediction market has been a hot trend this year, and really starting from late last year, ahead of the U.S. presidential election. And increasingly, we are seeing more companies, especially crypto companies and different type of brokerages are moving to offer prediction markets. So the latest one is Coinbase. And Coinbase, according to my reporting, is set to launch their own prediction markets, which they will unveil in their product event in mid-December. And they are going to work with Kalshi, which is a U.S. regulated prediction markets, to offer the product.
How lucrative could this be for Coinbase? How do they plan on making money? Do we know anything about that?
We don't. And we know that there's intense competition among the two major prediction markets right now. One is Polymarket, which doesn't really charge transaction fees yet, so they don't really make much revenue. And another one is Kalshi, which does charge transaction fees. So I think so far the priority for all these players is really to grab market share and to be able to attract users as opposed to prioritizing generating profits.
Tell us a little bit about the rivalry between Kalshi and Polymarket. Are they literally the exact same products? Is one more popular? Has one gotten more venture funding? What do we know about them?
They're competing head-on. Historically, Polymarket is the one that's offering outside of the U.S. They're bigger, and they for a few years they were not allowed to operate in the U.S. because of a regulatory settlement that they reached with the CFTC. And then on the other hand, Kalshi is the biggest provider of prediction markets in the U.S., and that's because they have a license under the U.S. regulatory regime. However, this year things are going to shake up a little bit, and that's because Polymarket in the summer was able to get regulatory approval to enter the U.S. market after they acquired a licensed exchange and clearinghouse. So right now we expect to see both markets showing up, both providers showing up in the U.S. market, and we expect to see intense competition between them in all aspects, not just in competing for users, but also investor capital,
Right.
Increasingly partnerships. And
which one has raised more venture capital so far?
Polymarket is valued higher so far. So last month they raised at $8 billion valuation, including from the owner of New York Stock Exchange, and Kalshi raised at a $5 billion valuation last month, and they are backed by big name investors such as Hendrix.
And can you walk me through a little bit of the regulatory discussion here? You touched on it a little bit, but look, crypto, the name of the issue at hand really has been, is crypto a security? Is it a commodity? Is it neither? Where does it sit in the regulatory system? Who even regulates it? Now we have this environment where we have a little bit more regulatory clarity with crypto. But how do the prediction markets fit into that issue? And has that been a challenge for them at all? Or is it fairly similar to crypto in that it's looser regulations, and so that's why they're allowed to get traction here?
So prediction markets in the U.S. are regulated by the CFTC. But they are, for these companies to expand, they are still pushing the regulatory boundary. And part of it is really related to the kind of bets that they're offering, because they're letting people to bet on all sorts of things that historically they don't really have a market for, such as whether Taylor Swift will have a wedding next year, or the year after. Um, and that, I think, starts to get murky because some of the markets that we know are definitely not allowed to be launched include, for example, betting on the assassination of politicians. And that's something that would definitely be illegal because you do not want to offer a market where you could potentially incentivize people to carry out assassination. But then
Right.
for some of the other events, it's less clear, and that's where it starts to get tricky. And also, a lot of the bets are related to sports,
Right.
and historically, sports contracts in the U.S. are regulated by state regulators.
Hmm.
These markets will also have to deal with state regulations. And then there's also a whole host of issues related to policing watch trading, insider trading, and these are issues that just occur with any markets.
But despite all this, one of the things you talked about in your story is it's not just Coinbase. There are other big public companies that are also increasingly looking to prediction markets to expand their operations.
Yes, and we know that companies are the first adopters. So Coinbase is moving
Right.
ahead.
DraftKings was the other company you mentioned.
Yes, sports companies, DraftKings are moving ahead as well. Crypto.com has a similar product, and even President Trump's Truth Social announced plans to get prediction market. And so are the brokerages. Robinhood is another one offering prediction market.
And so just bringing us back full circle to one of the earlier questions I asked you at the start around what this means for Coinbase's strategy more broadly, is this an effort for Coinbase to diversify their revenue? Is this really just, is it the next crypto in terms of a market that is starting to get built up? What does this mean for Coinbase's strategy overall?
Yeah, it's part of Coinbase's strategy to become an everything exchange. So they started with crypto trading. They have big followings among crypto users, but they're also hoping to bring more types of assets onto their platforms, and prediction markets is part of it. They're also working on tokenized stocks, which is to allow users to be able to get exposures to US stocks on the blockchain through
Right.
token format. And it is part of their plan to be able to offer more types of products and become more integrated with the financial life of their users.
Great. Well, Yueqi, I want to thank you for coming on. It's a fascinating story, and we will have you back on again soon. That is Yueqi Yang, our crypto reporter here at The Information. Okay. Gender diversity and underrepresentation in venture capital has been a long-standing issue that we have tracked for a long time here at The Information. All Raise is an organization that has centered themselves on this problem, and I want to bring on the CEO of the nonprofit Paige Hendrix Buckner to talk about the progress it is making. Paige, welcome to the show. It's great to have you on.
Thanks for having me, Akash. It's so good to see you today.
So let's talk about the issue at hand here. For those of us who aren't up to date with the latest stats and where the current state of play is on this matter, walk us through where we are.
Absolutely. Well, first, I just want to say thank you so much for having me. I love this program. I want to tell you a little bit about Allraise so you have context for the numbers that I'm about to share. So we're a national nonprofit that is focused on helping women and non-binary VCs knock it out of the park. So that's get a seat, keep their seat, and be successful. And what's important for us to remember is that when we first started our journey, only 9% of all decision makers in VC were women.
Hmm.
And I just want to let that settle for a second, because at the time there was about 170 people.
Wow.
Now, when we look at the industry, it's about 18.6%, which is about 2,050 people, which is fantastic. But what we've learned during our journey is that title does not mean power and influence. So part of our work is not just to count people in seats, but to truly measure their power and influence and help them grow it.
Right. Certainly in venture capital, where it seems like partner is a title that gets thrown around a lot now, and sometimes it doesn't mean a whole lot.
Yeah, and I actually think we should dig into what it means, right? And at the time when we first started counting, I think partner meant something very different in the industry. But now we know it doesn't mean that you can lead a deal, wire money, take a board seat, or have real influence to get your deals done. So it's important for us to really understand what that title means, and for us to help people understand what power and influence means so that they can continue to build their track record. At the end of the day, we just want to help our community members be great investors and put points on the board because we know it's great for their firms
Hmm.
and it's great for the portfolio companies that they invest in.
So I want to dig into some of the root causes here, but as you think about measuring this data here, titles is an easy thing to track. Decision-making power is a little more qualitative. How do you go about studying that space at all? And then we'll get into the root causes in a second.
Yeah, this is part of our new 3-year strategy is to study power and influence. And so for us, what we'll be doing is looking at the different measures for power and influence. And again, that could be leading deals. It could be carry and compensation. It could be voting power on the IC. So we will be exploring all the different behaviors and characteristics in 2026 and then come back to you all actually to share a little bit more about what we learned when it comes to not only measuring power and influence and determining what it really takes to be powerful, but then also how do people measure up and how do they grow it within their firm, whether that is continuing to build their track record, building a strong competitive edge because of the knowledge they have or the network they have. And then again, also more publicly getting credit for their deals because something really important that we've learned is that so many of our community members are putting points on the board. Like Lauren with Chime was such a huge win. We want to see more
Right.
Laurens knocking out of the park with IPOs.
She's been on the show. It was a great discussion with her.
I know. She was fantastic. And we want to hear more of her stories. And I think that's an important part of this work is that we have to not only share the data, but also
Right.
people behind the data, because that's what changes people's perception of success.
Right. So now, speaking about the data, what are some of the core reasons that you've identified as reasons for why that number isn't bigger right now, that 18% figure?
That's a great question. As I think about why that number isn't larger, I think there are 3 reasons that come to mind. Number 1 is that it takes time to make change in an industry. And I'll have to share with you, we're delighted that we've been able to help double the percentage of women and non-binary folks in decision-making roles in just 7 years. That's 3 years ahead of schedule. But I do think it takes time. I think number 2, most firms are pretty small, and we think about how many people are actually in decision-making seats. You have to add more to the pie before you can add more
Right,
decision
right.
makers, right? You can't just simply promote somebody. I think the third piece of it is folks need to continue to remember that the data is good when you have gender diversity on any decision-making team, whether that's in a boardroom, that's in a venture capital firm, or that's at a startup. And so
Right.
I think those 3 pieces together are critical, and that's a big part of our work over the next 3 years.
And more what I was trying to get at is as you look at the challenges that women and underrepresented venture capitalists face right now in the current ecosystem, what are those challenges? What are people coming to you and saying, hey, this is a problem for me. I'm trying to break through on it, but is it culture? Is it the number of positions? Is it the way the industries are built? Talk about that.
Yeah, the first part of it is I think it's been a very challenging time in venture capital, full stop. So when we think about the influx we saw of capital and of women and non-binary folks into the industry and generally underrepresented people, and then you see a contraction in the industry, what I've noticed is that some of those folks, while they have built their track record, haven't had enough time to put the kind of points on the board to be able to say, hey, you should keep me in the firm. Or they have put points on the board, and because of internal systems, they're not getting promoted at the same rate. And I can't tell you the number of times I've talked to folks who've said, I have a great track record, but my firm has promoted a man instead because they have stronger relationships internally or they have more power and influence. And I think what's great about looking at the data is to remind people that venture firms are about making money and you want to make sure that your stars shine. And it's not just about having great relationships, it's about going back to the data and people's performance. The second part of it, though, is that we've seen so many women spin out and start their own firms. And it's a really tough market to raise money in, whether it's
Right.
firms that are raising, funds 1 through 3 or 4 through 6. And those are the 2 buckets we focus on. And so in this time in particular, it is important for us to help LPs understand the opportunity. And they do. That's what we're hearing. But what I've heard time and again from women and non-binary folks who got to raise is they get more questions about risk and they're having a tougher time telling people the story or getting folks who are excited to invest in them, even when they compare to their male counterparts who don't have a stronger track record, who maybe don't have all the logos that they have. And so again, I want to remind people that if you go back to the data, women and non-binary folks are competitive. This is not about handing out to people who are not doing the job well. This is about recognizing the track record they've built, the potential that they have, and the opportunity we're missing if we're not betting on them.
Right. I'm curious. Look, we have a lot of talk about an AI bubble right now, or a lot of froth in the market broadly, not just in the stock market, also with venture capital valuations. I wonder, as you've studied this issue through market cycles, is this an issue that sometimes can get better or worse in times of booms or bust? Do you see progress that is made, ultimately walked back a little bit when times get tougher? Is that something that we should be thinking about as these talks of these bubbles persist?
Absolutely. And if you look at the data from 2023, when we started to notice a real pullback in venture capital, what I heard from several women was their concern that though they were competitive, if they were maybe the first in, they might be the first out, even if they had the track record. And I think part of that is because we go back to what we know in times of challenge or contraction. And so in this moment, again, it's important for us to remember, let's go back and look at people's track records. Let's go back and use really objective data to make decisions about hiring and promotion. And then the last piece that I'll share with you is that it's disappointing because the data is so good about having diverse teams over and over and over again, that in these moments when it feels like it should be the natural thing to do to go back to the people you know, the relationships you trust, you might be missing out on alpha because you are not actually investing in the person who has a perspective into the market that you don't have, because they have networks, they have experience, they have skills and knowledge that you don't have. So yes is the short answer, and the long answer is there's opportunity on the other side of betting on people who have perspectives and experiences that you don't have, and who also are willing to roll up their sleeves and do the work. So
Right.
I'm really excited in this moment, especially with DEI backlash, to say the data is good. There's opportunity here. Let's keep going.
Right. So let's talk about some of the specific initiatives then that All Raise has crafted to target this issue. What sorts of, I know you run a conference every year. I mean, the conference is a moment in time, but if you talk about what comes out of the conference, what is the work that All Raise is doing on the ground, and how have you seen that really catch some traction?
Yeah, so Allraise is a national organization that has approximately 1,200 members, and they're mostly senior folks from coast to coast who are excited to build their skills, knowledge, and network. And one great example of what that looks like in action is our VC Summit. So we recently hosted it. And what was exciting is that it was an opportunity for people to connect with each other, to share their skills and knowledge, but then also get transactional. And I can't tell you the number of stories that we received about people who were sharing deal flow. We're talking about their next co-investments together. And we had a really powerful stage. We were fortunate enough to have Dr. Jill Biden join us and talk about her work in investing in women's health. We also had Gwyneth Paltrow talking about her new fund, Kinship Ventures. And so I'm excited because this is an opportunity for people to not only connect with a bigger, broader narrative and a message about why investing in women and non-binary folks as VCs or as founders is good for business, but they're actually doing business at the summit. And what's exciting to me, it's a celebration of people's accomplishments. And so we can talk about people like Sarah Smith who've gone out to start their own fund, have successfully raised that fund and are already investing. And then next year we'll get to come back and talk about the track record that Sarah's building and other people in the room. So again, Always is an incredible place to be both relational and transactional. And the last thing I'll share with you is we have men who join us every year who also bring and get incredible value as speakers and as participants. And we had some great folks who joined us this year, like Ryan Neese from Legacy, our Next Legacy, and Lance Armstrong joined us this year from Next Ventures. And those are just two examples of folks who not only saw value in joining the experience, but also adding value by sharing their perspective in sessions all about what's really happening in the market and how people can be the best at their job.
Great. Well, Paige, I want to thank you for coming on. It's an important issue, and you talked about that 3-year strategy that All Raise has. And so as you implement that strategy, I'm looking forward to have you back on to talk more about it.
I'm thrilled to come back and chat with you. Thanks for having me today.
Awesome. Good to see you. Thank you, Paige.
Good to see you too.
All right. Well, that does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I'm already excited for our next show tomorrow. Have a great rest of your Thursday. Bye-bye for now.